Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Taking fright, Asian equities track the drop on Wall Street as the AI scare trade rolls on. The sky is the limit. U.S. Energy Secretary says he sees tremendous potential for US-Venezuelan cooperation as the Trump administration pushes for private companies to rebuild the nation's energy sector. Plus, we speak to the CEO of Talabat as the UAE delivery giant posts a full-year earnings. Well, it's just gone 9 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Quite the risk-off session yesterday for Wall Street. We saw a pullback of 1.6% for the S&P. The Nasdaq down 2%. Some of the names getting hit in the basket. Apple down 5%. Meta almost down 3%. Amazon down more than 2% as well. And what we're seeing really is it's not just those big tech names that are getting hit or some of the obvious hyperscaler names, but also specific industries as well. Any industry that is perceived to be ripe for AI disruption has been suffering in the last couple of days. And of note is the logistics sector. I'm going to show you a chart in just a few moments. Today, what we are seeing is things are stabilizing somewhat for the S&P and Nasdaq. We also get data to watch out for later today. CPI, remember, we had the jobs print a couple of days ago. Surprise to the upside. Let's see what CPI brings today. Another market-moving event. But the handover from Asia, not so pretty. We'll talk about that in just a moment as well. 10-year yields, we slid about 8 basis points yesterday with the risk-off environment. So again, what you're seeing is a classic risk-off trade here with equities down, a bid for fixed income. And then we also saw yesterday, interestingly enough, and this is actually contrary to usual correlation, gold come off as well. This morning, it's actually up 1.1%. But during the course of the day yesterday, it also got heavily sold into. Why? Perhaps because of margin calls in portfolios. People were taking off some winning trades to compensate for some losses in other parts of the portfolio. But typically that would not happen. Today, you are seeing gold stabilize. We are still, though, below $5,000 here. And the chart that I wanted to mention to you is just the chosen sector of choice yesterday for the market to be disrupted by AI. Take a look at this. This is the U.S. trucking index, and you saw a massive move in terms of price performance yesterday. A lot of the stocks in that basket getting hit. The latest casualty, I would say, in terms of the markets jumping to conclusions vis-a-vis which industries are going to get hit. And last week we were speaking a lot about software as a service, then wealth management, and now we're talking about logistics as well. All right, let's continue the conversation and check in on how markets in Asia are faring this morning. Min Min Lo is in Hong Kong for us. It is not a pretty morning, Min Min.
Hey, Jomana, we are seeing the exact same thing in Asia. You're talking about the trucking stocks, and here we are, another day, another sector that is hit by this AI scare, the logistics sector. Here are some of the logistics stocks in Asia. WiseTech, for example, down by about 10%. That's after what we saw in the US, right, with that former karaoke company that came out with a new AI tool that is threatening the businesses of these logistics and trucking companies. So we're seeing that sort of spill over into the Asian market. And you flip the board and take a look at the broader market. The MXAP index yesterday at an all-time high, today pulling back a little bit. The CSI 300 also down by 0.7%. We got the home prices data from China not looking very pretty. Used home down as well, but at a slower pace than before. So that's a little bit of a relief. And it looks like the Nikkei as well taking a breather from that Takaichi trade. It seems even the yen slightly weakening today. But the Kospi, though, it seems like Teflon, right, still pushing higher. It seems like Samsung inexplicably continuing to push higher today. And it seems like the Korean market has been pretty insulated from the tech sell-off in the US, perhaps because some of these tech stocks in Korea tend to be higher up in the value chain, more concentrated around the hardware rather than the software.
Yeah, Kospi, a lone spot of green. Min Min Lo in Hong Kong. Thank you so much. Joining us for more market insights is Sébastien Page, Chief Investment Officer and Global Multi-Asset Head from Rowe Price. Good to have you in the region.
Thank you.
Let's start with the tech route that we're seeing. What do you think is going on?
It's interesting. We're moving from the trade where everyone's interested in the AI build-out to everyone's talking about the AI beneficiaries, those that are going to have huge productivity gains. to the AI victims. And I think this trade could continue for a while. And you know what? We're not too worried about it. In our portfolios, we're actually barbelling our U.S. exposures between growth stocks, which have come down, and that's more of a contrarian play, and value stocks.
Yeah.
And we actually underweight the core, stocks that have run up, but that have nothing to do with the AI build-out.
So could we be in an environment where AI stocks or AI victims, so to speak, continue being revalued by the market, but at the same time reevaluated by the market, but at the same time other parts of the economy actually do quite well?
Absolutely. And we could continue to see the volatility in the AI victims while the economy in the U.S. is looking pretty good, Jumana. It's on a nominal basis, probably growing at around 7% right now.
Yeah.
That's higher than any calendar year between the great financial crisis and COVID.
Yeah.
That is solid growth. The U.S. administration wants solid growth into the election, and they're going to pull every lever they have. So AI stocks volatility is one thing, but the U.S. economy is doing just fine right now.
So what, you buy small caps then?
We are long small caps. For small caps to perform, you do need the short rates to come down. You know, those companies, they borrow short term, and when the cost of short-term borrowing comes down, it flows directly through their bottom line. That's why over the last few years, every time you get Fed dovishness, you see small caps outperform.
Yeah.
But they also need positive growth. But not too high growth, because then the Fed's going to step back. So there's a channel where small caps do well.
Goldilocks. Yeah.
It's Goldilocks.
Where you maybe get 1 or 2 interest rate cuts out of the Fed this year, but the outlook is still pretty robust for the U.S. economy.
Exactly.
So are you not worried about portfolio effects, like what I was just saying at the top of the show? You know, gold, surprisingly yesterday, people selling down and trimming down in their portfolios. There's so much concentration around these AI stock plays. And I do wonder that if we continue to see moves of this magnitude, there will be certain knock-on effects to other industries, not necessarily because they're getting a hit to bottom line, but because they're in people's portfolios. Yeah,
because they're the victims. Markets right now are close to historical highs in concentration. From an asset allocation perspective, we are long diversification. We like non-U.S. value stocks. We just talked about small caps. I think if you look out 6 to 12 months, the markets will continue to broaden. This doesn't mean the AI theme is over. It just means that diversification will, I think, do well if we get a down market, which is supposed to do, but also on the upside. So I like the asymmetry of being long the broadening. On gold, Jumana, it's been such an interesting trade. It went up 130% in 2 years. It's come down a little bit. I'm kind of a correlation nerd. I've studied correlations. I've published articles on correlations. In the last 12 months, you saw all sorts of strange correlations.
Yeah, okay, so let me bring you another correlation one, since you're looking at that space. What is going on between Asia-Pacific stocks versus the U.S.? The correlation there has completely broken down. And, you know, day after day, we've been talking about the massive outperformance of the MSCI Asia-Pacific, some of the specific chip maker indices, the Kospi. Why do you think that is going on?
Historically, when the U.S. market does not do well, it really propagates to the rest of the world. If you're seeing lower correlation, in my mind, it's because you have better relative valuation opportunities outside the U.S. and a convergence of earnings growth. You have an opportunity for earnings growth to accelerate in Asia-Pacific, all over the world, relative to the declining, still fast-growing, but declining rate of growth of the U.S. large-cap growth companies. So not only do you have a valuation advantage, but you also have a convergence of fundamentals. So that should help, and it's possible that you'll get still, like last year in U.S. terms, non-U.S. stocks outperformed by 10, 15% the U.S.
I want to round up with a question just addressing the fact that you are in the region. What are the types of discussions that you've been having with investors here? I mean, are they concerned about what's happening in AI space? Are they buying the dip?
Fascinating discussions with investors all over the Gulf region. They're really still interested in private markets. The amount of capital being deployed in this region is staggering. The economies are growing well. Inflation is not a problem. There's a lot of employment. There's a lot of traffic, too. I've learned here in Dubai. I got stuck in traffic yesterday. We got stuck in traffic in Riyadh. But that's dynamism. I would say generally my discussions with large investors here, they're optimistic for the future. It's a positive vibe I'm getting.
Yeah. Good. We like positive vibes. Sébastien, thank you so much for coming on.
Thank you.
Sébastien Page, Rowe Price, CIO and head of Global Multi-Asset. Well, I'm going to bring you some breaking news. This is coming through from the FT. Let me just say, the U.S. seemed to be weighing a plan to roll back some aluminium and steel tariffs. So this is interesting, which would be obviously have a notable impact on some of the metals that had been impacted by restrictions in this place and the run-up to the imposition of those tariffs. The approximate effective tariff rates as they stand right now for aluminium, iron and steel are around 40%. 40%. So we don't have more details at this point as to how much of the tariff rate will be rolled back, but what we do know from this FT article is that the U.S. is considering undoing some of them. So we will bring you more developments on that if we hear more details. Now for a look at some of the other stories we're following today. Washington and Taipei have finalized a trade deal to cut tariffs and boost market access for U.S. products in Asia. Goods from Taiwan will now face a 15% tariff, with some exceptions for tech and pharmaceuticals. Taiwan's pledging to buy $44 billion of U.S. energy and further open its markets. But uncertainty remains over Taipei's promises to invest hundreds of billions in U.S. chip making. President Trump says he can see negotiations with Iran stretching for as long as a month as he seeks a diplomatic agreement that would roll back Tehran's nuclear ambitions. He also says it will be very traumatic for Iran if it fails to reach an agreement. Trump's comments came a day after he met with Israeli Prime Minister Benjamin Netanyahu at the White House.
It's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be I think a very difficult time for them. I'll talk to them as long as I like, and we'll see if we can get a deal with them. And if we can't, we'll have to go to phase two. Phase two will be very tough for them. I'm not looking for that.
And coming up, the U.S. Energy Secretary says Venezuela is happy to have America's help in rebuilding the oil sector. We hear more from Chris Wright next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Bloomberg has learned Venezuela plans to grant more oil production land to Chevron and Repsol. Sources say officials in Caracas are preparing to award the exploration and production blocks as soon as this week. U.S. Energy Secretary Chris Wright has toured a project operated by Chevron in Venezuela's Orinoco oil belt. Washington's pushing for private companies to rebuild the nation's energy sector. Now, the U.S. Energy Secretary also says that Venezuela's acting president, Delcy Rodriguez, is happy to have America's help in rebuilding the oil sector. Wright is the most senior U.S. official to visit since the capture of former President Nicolas Maduro, and he told us there's reason to be optimistic about Venezuela's desire for reform.
The last 5 weeks have shown absolutely yes. We've worked very careful with interim President Rodriguez. She's made enormous changes very rapidly, starting January 5th. We already see a better business climate for Americans. We see smiles on Venezuelans' faces. We see local businesses here now optimistic about their future, talking about a return flow of Venezuelans if things continue on this path. So yeah, I think great optimism.
The president at one point said the U.S. was in charge of Venezuela. What does that mean on the ground practically?
I think it meant that 20-plus years of failed diplomacy have failed to change the trajectory of Venezuela. And now, with, again, a very groundbreaking approach, we have so much influence over Venezuela that we're able to nudge things in the right direction, maybe more than nudge. But I think we're aligned. What's in the best interest of interim President Rodriguez is to enhance the lives of Venezuelans. As society opens up and moves towards democracy, you've got to be popular with the people.
Some might hear nudge and think leverage. What kind of leverage potentially does the United States have and is using?
The big leverage we have is we're selling the oil that's produced and exported from Venezuela. This has big advantages for Venezuela as well. We're getting more than 50% higher dollars per barrel for the sale of that oil. We're removing a lot of the corruption that was associated with that, and we're able to direct those funds to the government and people of Venezuela, but we have discretion about continuing to direct those funds. It forces us into a partnership to drive improvement in Venezuela and improvement in American-Venezuelan relations.
Chevron, where we are, has been in this country for 100 years, so they're ripe potentially to expand production. But what about others? Are you going to be releasing new licenses for oil companies to produce in Venezuela and expand production?
Absolutely. We've already released a general license for all American and in fact, international oil and gas companies to come down, meet with officials, investigate possible deals, and then just come back to us when they have specific deal terms. We're releasing soon licenses that's going to allow the import of parts and services, so giant oil processing facilities like we're here can be upgraded and modernized.
Any new licenses or deals that potentially could be announced or that would be coming out of this trip specifically?
Well, Chevron is being enabled to massively grow their business here. They're the largest producer in Venezuela today, and they're going to be able to both expand the reserves they have and expand their operations. We're going to see a pretty good clip in rising Chevron production over the next 18 to 24 months in Venezuela. They're just one of many, but they're going to be a big one.
U.S. Energy Secretary Chris Wright speaking with Bloomberg's Anne-Marie Hordern in Venezuela. Now, coming up, South African President Cyril Ramaphosa vows to accelerate reforms to boost growth and attract investments. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Ghana is moving to revamp its cocoa pricing system after a steep drop in global futures. The Ghanaian finance minister said the government wants to link prices more closely to international markets, allowing automatic adjustments when prices rise or fall. For the remainder of the season, the price paid to farmers has been reduced by nearly 30%, with state purchases set to resume at the revised rate. Congo has returned to the Eurobond market for the second time in 3 months, selling new debt maturing in 2035. The government priced the bond at a lower yield than its debut sale in November, aiming to take advantage of improved market conditions. According to Congo's finance minister, the offer received more than $2 billion of orders, with strong demand from a diverse base of international investors. Zambia's local bond market is seeing foreign investors pile in after authorities lifted a cap on non-resident participation in debt auctions. According to the central bank governor, foreigners accounted for nearly half of purchases since the limit was raised. The higher participation limit gives foreign investors room to roll over holdings maturing this year by reinvesting in government securities, easing refinancing pressures for the government. And the South African President Cyril Ramaphosa has pledged to accelerate reforms aimed at boosting growth, attracting investments, and improving government efficiency. In his State of the Nation address, he pointed to progress on infrastructure, stabilizing debt, and rising investor confidence. Our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. So no surprise that the president struck an optimistic tone, and certainly that's been the key, macro discussion around South Africa over the last 6 to 9 months. What was the key focus of his speech last night on upcoming priorities?
That's right, Jumana. This was quite a lengthy speech for President Ramaphosa, clocking in at just about an hour, 45 minutes. And as you mentioned, yes, unlike past speeches, which have really focused in on a lot of the crises that this country has faced, a lot of the speech was spent focusing in on some of the optimism that we have seen within the macroeconomic setting and the backdrop here. And we heard that from President Ramaphosa. He talked about how we have seen inflation come down to the lowest levels that we've seen in almost 2 decades. He talked also about how we're seeing 10-year government bonds have dropped as well. And he also focused in on how we've seen consecutive growth of the economy, GDP growth, and a number of analysts have also pointed to that. And so you can tell that he was having quite a bit of fun just focusing in on that. And it seems like, especially with this new government of national unity, there was a bit of sigh of relief that there is a bit of stabilization in the economy. But yes, as you're mentioning there, a lot of the focus, though, is on what is ahead, because there is no silver bullet to a lot of the challenges that this economy still faces, which he did acknowledge. Unemployment is still just about 30%. And some of the reforms that analysts and investors are hoping for here in this country, they need to move faster. And so the president talked about the focus on accelerating the improvement and the building of infrastructure. So he focused in on roads, bridges, dams, of course, ports, which is very important for South Africa.
Yeah.
He also brought up this idea of reviving the property market. And still, you know, I think what was very interesting is that there still is, I think, a macroeconomic backdrop that looks like stabilization, but the lived reality is still not being felt. And so he acknowledged that there's quite a lot that needs to be done from a national level, that the local governments, in his words, have not really been able to tackle, water being one of those issues.
Okay, let's talk about electricity. Eskom also coming up. What did he say about the utilities restructuring? Obviously, this is a long-standing issue or challenge for South Africa.
Yeah, of course. And fortunately, it was not about load shedding, but the bringing up of Eskom was, in fact, this idea that they would create this independent power transmission company, which actually counters what many people had been expecting and what Bloomberg had been reporting in the past. And President Ramaphosa actually brought up just about 5 or so years ago the idea of breaking up Eskom into 3 separate companies. Many people looking from the outside thought that this would be a better idea for competition and also for operating the electricity market, especially given some of the challenges that we've seen in the past. But now this new entity that President Ramaphosa brought up said that he said that it will have ownership and control of transmission assets and be responsible for operating the electricity market. The concern here, though, is that, as I mentioned, it doesn't create separate entities. So what does it do for South Africa's enabling of and moving towards this just energy transition partnership, which is backed by the EU? How does it help South Africa phase out of coal? And also, what does it mean for some of the debt issues that Eskom has had in the past? We don't know those answers yet, but this is the latest that we did hear on Eskom from the president last night.
Jen, thank you so much for bringing us some of the highlights from that State of the Union. Jennifer Zavazaja, our Chief Africa Correspondent in Johannesburg. Well, coming up, we speak to the CEO of Talabat as it reports a 15% jump in profits year on year. We'll discuss the regional food delivery giant's plans for 2026, as well as consumer trends next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Taking fright, Asian equities track the drop on Wall Street as the AI scare trade rolls on. The sky is the limit. The U.S. Energy Secretary says he sees tremendous potential for US-Venezuelan cooperation as the Trump administration pushes for private companies to rebuild the nation's energy sector. Plus, we speak to the CEO of Talabat as the UAE delivery giant posts full-year earnings. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, a pullback for Wall Street and also in Asia today. So ending the week on a negative tone. Obviously, in terms of data to watch out for, CPI data in the U.S. is what people are going to be paying attention to. But in the interim, what we are seeing is this tech rout. The AI sell-off continues, and not just to software names, as we were speaking about last year, but really any industry that is seen to be an AI victim. We spoke about wealth management yesterday. Today, also the focus on logistics, trucking, U.S. trucking getting hit as well. So those are some of the themes that are emerging from the U.S. session. Today, S&P futures stabilizing somewhat, but still leaning towards red, down 0.2%. NASDAQ down 0.2%. We saw a real big pullback. The likes of Apple down 5% yesterday in trading. dropping. 10-year yields, because of this risk-off move, we saw investors piling in to fixed income. We rallied about 8-9 basis points throughout the course of the day. Yesterday, we're actually at the lowest level for 10-year yields in the past year, sitting just over 4.10 now. Markets is still pricing in around 2 rate cuts for 2026. And then gold rebounding a little bit this morning, but still shy of $5,000, up 1%. And yesterday, interestingly enough, I spoke about this earlier in the show, with the sell-off that was taking place, we actually saw gold come off as well, which is strange. Typically, the safe havens would do well, and speaks to perhaps of investors trimming positions after sustaining losses. So you sort of sell your winning positions to compensate for the losses in other parts of your portfolio. And switching over, I did mention disruption, AI disruption. This is the impact that yesterday's... oh, no, this is a different one. Apologies. This is actually a setup for our next segment. Emerging markets continue to do well, and this is sort of a break in the correlation between some of the price action that we've seen in the U.S. this year versus other markets. We've been obviously speaking a lot about the massive outperformance of the Asia-Pacific index, the MSCI Asia-Pacific, but then you're also seeing a tremendous performance in some of the African stock exchanges, the Johannesburg Stock Exchange, and in a short while, we're going to be speaking about Oman as well. So lots of these emerging market indices are doing quite well. So something to bear in mind. Now, a recap also of breaking news that came out at the top of the show. And just to tell you that this could potentially be quite market moving. According to the FT, the U.S. is weighing plans to roll back some aluminium and steel tariffs. And here you can see that the approximate rate on aluminium as it stands right now is around 40%, iron around 40% as well. Other tariffs slightly lower. But the point is that it seems as though the U.S. administration is having a rethink because of a fear that U.S. consumers are beginning to complain about the state of the economy and paying for higher prices. And remember, this is going to be quite a political year with the midterms coming up. So you have to wonder whether that also got factored in to this decision. Nothing is confirmed yet, but this is a report coming through from the FT that the U.S. administration is reconsidering or perhaps lowering or softening the tariff rate on some of these key commodities. Right, let's turn to earnings now. Food delivery giant Talabat has reported full-year adjusted profit of $451 million. That is a jump of 15% year-on-year. The Dubai-headquartered firm plans to invest $100 million this year to grow its subscriber base across its verticals. Joining us now is the CEO of Talabat, Toon Gyssels. Really good to have you with us on the show. Maybe let's just start out with a look back at the year and whether you're pleased with Talabat's performance and the jump, your full-year adjusted net income, $451 million versus $393 the year before.
Look, thank you for having me, Jumana. 2025 was a very strong year, strong growth, strong profitability, and we're also returning some of that capital to our investors. We're proposing to the board a dividend of $421 million that will be approved by the AGM in May. So it was a very strong year with actually accelerated growth.
Yeah, well, this is the first time I speak to you in your role as CEO. How are your priorities going to be different from your predecessor?
So I think the foundation that Talabat built is very strong, right? It's a leader across all our markets. And what I bring, so I've been at Talabat before, so I know the business. Afterwards, I spent time early stage, and I bring some of that early stage focus energy back, because we're going to build the future for Talabat beyond food. Right? Talabat will become an everyday app. And we already have great traction in grocery, but the coming year we'll also be investing in building new verticals. In H1 alone, we'll build 3 new companies that we start. So it's actually really positioning Talabat beyond food as that everyday app.
So that $100 million that you've set aside for investment, where is it going to go to?
The bulk of it will go to the grocery segment. In groceries, we see accelerated growth now hitting 48% year on year. And we need to build the capacity for the future. Right? So we have Talabat Marts, which are our integrated verticals, our grocery dark stores. We need to build out that network to cope with the demand in the future. That's where the bull goes. Also, part goes to the subscription program and the ecosystem, and then these new ventures as well.
Yeah, I think lots of people have questions about competition in the space. You have competition coming thick and fast from China. Meituan is expanding quite rapidly in the region. How are you countering it?
So you see in the Q4 results that actually our growth is very robust. What we see competition impact is our low value segment, right? These people are a bit more sensitive to discounts, but our high value customers, which represent 81% of GMV in the competitive markets, they're extremely sticky. And actually their frequency is increasing by 6% year on year. And that's not just because we have the best offering on food, but also because of that ecosystem and groceries.
But it's not just about GMV, right? It's also about your pricing power. And I think, you know, if you can give us visibility on your pricing margins for this year in the context of that much competition, that would be quite useful.
So you see Q4 results, EBITDA is flat compared to Q3. So we're able to defend that quite well. What we're doing for 2026 is we're going to invest half a percentage point of margin to really strengthen that food position as well.
Yeah. And in terms of the strategies to maintain or increase your market share, what is the plan?
So our strategy is really becoming that everyday app and making sure people further increase their frequency. Today they're already a lot, but what we see people coming on a subscription program, for example, they uplift their frequency by 28%. So it is building that ecosystem, building additional verticals, and then the customers, they become extremely sticky to Talabat.
Yeah. So right now, if you look at the stock, it is actually trading at a discount to your peers. What do you think investors are not pricing adequately about the forward growth profile of Talabat?
So I believe that the investments we announced for 2026, right, it's a bit of a trade of short-term gains versus long-term value. And we're very confident on making these investments. And it's not new to Talabat. When I first came to Talabat, it was a marketplace model, and the world was a marketplace. Actually, people didn't believe in delivery. It was my first priority to build out that delivery. And so we made these investments back then, which sacrificed short-term profits for long-term gain. So we're doing the same now, and we're building Talabat for the future.
How does your market share today compare to what it was like a couple of years ago?
Today, we are still the leader in all of our markets.
Yeah. Do you plan to expand into other geographic locations? Or are you happy with the ones that you are?
We have a lot of growth left in our areas, but we are always looking at further expansion. Last thing I did at Talabat before was the expansion to Iraq, and it's something we should keep on our radar.
Yeah. And where would you say, in terms of geographic growth purely, where is the fastest growing region in the GCC right now?
For us, that's Egypt.
That's Egypt.
Egypt, we still have so much growth potential. It's a huge population as well. We see great opportunities there.
Okay. So looking ahead, when you think about the integration of all of the verticals that you speak about, how are you weighing investments in your business versus potential shareholder return?
We are sticking to the dividend policy, what we said at IPO. So we'll pay out 90% of net earnings, which we continue to do. And I think that's the right balance, where we can continue investing above net profit, which we're doing, but we stick true to that policy to have the right balance, short-term, long-term.
Oh, great, sir. Thank you so much for coming on our show. That was Toon Gyssels, Talabat CEO, on the day of earnings. Now, Omani stocks are heading for their best week in more than a decade as optimism builds that the Gulf Bourse's push to be classified as an emerging market will unlock fresh investor inflows. The rally reflects growing anticipation that Oman could secure an MSCI upgrade as trading volumes improve and a spate of recent listings deepen the market. Joining me now is Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Well, we don't speak about Omani stocks that often, but perhaps we will start speaking about them a lot more. What's been driving the upswing?
So the rally actually started sort of mid last year. It was just like in this week, it's really like kicked off. But it's this story, like you said, the inclusion into emerging market indices that is really driving the rally. And I think people are seeing how serious the authorities are about this. There's been a lot of market makers and liquidity providers added to the market, which is obviously improving liquidity. They're really going on the road, meeting investors, saying, hey, we're here. And I think it's also a bit of a, like, the rally feeds the rally, right? Because to be on the emerging market index, it's market capitalization is a big part of that. So, of course, like, the rally increases the market cap, which in turn makes it more likely to be part of the index. So it's a bit of a virtuous circle.
What is the read across for potential IPO listings? Was it last year or the year before, I lose track of time, where actually they secured the largest IPO of the region.
Yeah, so it was 2024. They had a record. Yeah, they had a record year. They surpassed London in listing volumes. The problem is those IPOs didn't actually perform for around 6 months. So they really struggled. So it kind of put the brakes on the privatization program. But right now, with this rally, there's a few listings in the pipeline. There's a fertilizer business, and obviously this is like a big boost for them. So we'll see.
Laura, thank you so much. Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Thank you. Now for a look at some of the other stories we're following. Saudi Arabia has appointed Fahd al-Saif as its new investment minister, tasked with drawing more capital into the country. Al-Saif replaces Khalid al-Faleh, who served in the role since 2020 and will remain in the cabinet as Minister of State. The appointment comes as the kingdom reviews its policies and spending priorities amid fiscal pressures and seeks to accelerate its agenda to diversify the economy beyond oil. Egypt has cut interest rates to their lowest since mid-2023 and trimmed the reserve ratio for banks to spur business borrowing and speed an economic revival. The central bank reduced the benchmark deposit rate to 19% and the lending rate to 20%. The move aims to safeguard the effectiveness of monetary policy transmission and free up liquidity to support credit growth. Now, coming up, allies pledge $35 billion in military aid to Ukraine ahead of the security conference this weekend. We're live in Munich with more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. UK Defense Secretary John Healey says allies have pledged as much as $35 billion in new military aid to Ukraine to strengthen its air defenses. That's after a series of Russian airstrikes on energy infrastructure and civilian targets. It comes ahead of the Munich Security Conference this weekend, where U.S. Secretary of State Marco Rubio says he expects to meet with Ukrainian President Volodymyr Zelensky.
I think so. I think he's going to be there, and there's a chance to see him. I believe it's on my schedule. I'm not 100% certain. But I'm sure we will. It's terrible. It's a war. That's why we want the war to end. People are suffering. It's the coldest time of year. It's unimaginable, the suffering. That's the problem with wars. That's why wars are bad, and that's why we've worked so hard for over a year now to try to bring this one to an end.
Let's go over to our chief European correspondent, Oliver Crook, who is in Munich. Ollie, so talk to us about this $35 billion commitment. Who is committing it, and why is it important for Ukraine right now?
Yeah, so apparently this is going to be new money that is going to be pledged in the form of $35 billion. It's going to be headed by the Germans. This was announced alongside, as you mentioned, the UK and, of course, NATO Secretary General Mark Rutte. And the ambition here, Jumana, and this is what the Ukrainians have been asking for a very long time, for the last few months, is air defense. Their air defenses are really sort of hollowed out at this point. They're not able to intercept nearly as much as they have been able to in the past. And the Russians, of course, have been absolutely devastating their entire energy infrastructure. We've been talking about it over the last few months, Jumana, but it bears, I think, repeating that you have hundreds of thousands of people across Ukraine, within Kyiv, who are without electricity, often without heat, and getting temperatures that reach as low as -20, -23 degrees throughout the day. So this is the sort of immediate concern that the Ukrainians are facing every single day. And this is in part because, of course, over the last year and the many changes that we've had since Trump has become president of the United States has not given any more sort of free support to the Ukrainians. They do sell some of these systems, but many of these sort of cruise missiles and the higher velocity munitions that the Russians send over can really only be stopped by American air defense and these Patriot systems. So we understand that from this package, it's not yet been fully okayed by the capitals. What they're looking to get is 35 of these Patriot batteries. 5 of them will be pledged by the Germans. The Germans say if they can get those extra 30 from elsewhere. So this is going to be a very welcome relief for the president of Ukraine, Volodymyr Zelensky. He'll be arriving here in Munich in due time over the next couple of days to have very important meetings with, potentially, as you say, Marco Rubio.
Well, I was going to say, in the introduction, we were talking about the presence of the U.S. Secretary of State. And, of course, the state of that transatlantic relationship is under big question mark. It got a bit testy during Davos this year. Surely that's got to be a focus of the conference. What else is on the agenda?
Yeah, Jumana, it's hard to sort of know where to begin with this, right? Because over the last sort of 12 months, let's just take us back to Munich Security of last year. That is where basically the Trump administration, in their sort of large numbers, left the country for the first time and gave the world a dose of what MAGA foreign policy would look like. And that dose came in the form of a speech by Vice President J.D. Vance, in which he proclaimed in front of these sort of crowds over here that the greatest threat to Europe was not Russia, it was not China, it was the threat from within. He was saying that basically liberal kind of woke values are a bigger threat to Europe than any of these other adversaries. That, of course, when I was talking to the people after that speech, a few world leaders included, they were pretty shocked and really didn't know what to say about that. And over the last 12 months, we've really seen that policy come into focus. So I think we could take a couple of things here. First of all, J.D. Vance will not be here this year. Potentially that is some kind of message. Marco Rubio is seen as a more sort of traditional ally of the sort of traditional values and the traditional sort of, shall we say, alliances and antagonisms that the United States has had through the years, so that is potentially an encouraging sign. But as you say, Jumana, at the end of the day, since the sort of Greenland incident earlier this year in Davos, the trust has been fundamentally broken here from the Europeans. So the conversations that I will be having with a number of people, including the German defense minister, is they need to reevaluate everything they thought they knew about the transatlantic relationship. And one of the questions that is most difficult on, Jumana, is the question of the nuclear umbrella, and that is one of the conversations we're going to have to advance. Can Germany really be the strongest defense force in Europe without a nuclear umbrella, for example? Those are going to be some of the conversations we're having with policymakers here.
Really looking forward to your coverage, Ollie. Thank you so much. Oliver Crook, our chief European correspondent in Munich. Well, coming up, Dubai's ultra-luxury property boom shows little sign of slowing. We'll bring you the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Goldman Sachs' top lawyer, Kathy Rumler, is leaving the firm following the release of documents showing her links with sex offender Jeffrey Epstein. In a statement, CEO David Solomon says he respects her decision to resign, and Rumler was hired by Goldman in 2020 and later became its legal chief. The bank has said she disclosed to the firm's leadership at the time that she had previously dealt with Epstein. Citigroup has boosted the 2025 pay of its CEO, Jane Fraser, to $42 million. The 22% increase follows a year which saw the stock surge more than any other Wall Street bank. The pay bump also puts Fraser's total package for the year just $1 million behind that of JP Morgan's Jamie Dimon. And Dubai developers see the luxury property boom continuing in 2026. Developers like H&H Development are betting that global demand for high-end real estate will stay strong even as concerns about oversupply and geopolitical risk linger. For more, we're joined by Bloomberg's Zainab Fatah. So what is driving demand still at the ultra-luxury segment of the market? When we talk about ultra-luxury, define what that means, really.
It means homes that me and you can't afford, $10 million or above.
Speak for yourself. Exactly. I'm kidding. But tell us, what's driving this demand?
So Dubai is really have been for about the past 5 years setting the standards in luxury development. And this is a city that back in 2010, they barely had 3 transactions in that category. Last year, they had 500 transactions in that category. Wow. And it's been on a skyrocketing. And that's because there is an influx of very wealthy people coming to Dubai.
Still.
Yes, exactly. Continuing since 2020 when we saw Russians and Ukrainians come to Dubai. And this has continued, and now we're seeing a different influx coming from basically the UK with the non-doms change there, and we see a lot of people coming from other European capitals because of, tax structure is really helpful.
And Zainab, what's the proportion of hotels versus residences at this segment of the market?
So the hotels are usually here operated by a lot of the owners and a lot of these brands. So we're talking Four Seasons, Amman is coming up, Janu, Baccarat, and others. But at the same time, there are serviced apartments that tend to become part of these hotels, and they have top-of-the-line amenities, and they're proving to be a very big draw for the millionaires and billionaires of this world who are coming here.
I remember last year we spoke to the analysts who put that UBS report out about the risk of oversupply in the Dubai market. What is the feeling amongst developers that, at some point the good times might come to an end?
Well, we've been there before. 2 years ago, we were talking about oversupply and the possible correction. It haven't happened yet. But what's happening in the market, it's a two-speed market. On the very top end, we still have an undersupply of the top-tier properties, and you're still seeing developers able to sell penthouses for $150 million. Some are, going to levels that we've never seen in years.
Wow.
At the same time, at the wider market, we see expectations that oversupply, we might be facing oversupply in 2027, 2028. But when you talk to developers, they say to you, this is not going to happen because the capacity constraints among a lot of the contractors, it's going to mean that a lot of the supply is going to be phased over several years from there. And if the influx continues and people keep moving to the city, you may not end up with a big correction, even though Fitch warned that a moderate correction could be happening in 2026. So far, what we see that rents in the overall market have stabilized, so landlords are not able to charge, they kind of feel they got to the limits of the market, and values are slowing down, so you're not seeing price increases like we did a few years ago.
So it's still growing, but at a slower rate, essentially. Exactly. It's growth moderation. Zainab, well, thank you for that. And to buy the 10 million plus house. Bloomberg, Zainab Fatah. All right, let's check out the equity boards as we head out for the final trading session of the week. CPI in focus for U.S. investors later today. It's going to be a market move. We had jobs reports on Wednesday, surprising to the upside. And of course, if we do get a hotter than expected CPI print, that just adds fuel to the fire that perhaps the Fed don't need to be cutting interest rates this year. But the big theme has been the AI sell-off this week, and not just among software stocks, but also other parts of the economy that are getting hit as well. Wealth management, logistics, trucking, all in focus. Red on the board, red handover from Asia Pacific. European markets look like they're going to open up in the green. And keep an eye out on geopolitics this weekend with the Munich Security Conference. Bloomberg Television is on the ground there, so we'll bring you some of those interviews on Monday. But that's it for our show. Have a lovely weekend. Daybreak Europe is coming up next.